Hi, Assalamualaikum. My name is Norzahirah Binti Muhammad Razaki, matrix number 058763. First of all, our group choose Comfort Rubber Gloss Industry Sdn Berhad and Supermax Corporation Berhad. So I will tell you a little bit about background of these two company. I will tell you first about Comfort Rubber Gloves. This company was established in 1993 and located in Taiping, Perak. Currently, this company are export to the Northern American, Oceanic countries, Middle East countries, and many more in other countries. So let's move on to the Supermax company. This company was established in 1987 and located in Sungai Buloh, Selangor. Besides, this company has success in establishing its own brands in UK, US, Canada, and Brazil. In 2020, during the COVID-19 global pandemic, strong demand for rubber gloves caused this company share on a five-fold jump. This company donate 75 million to the government for battle this pandemic.
My name is Imanina Binti Asraf. My metric number is 057667. So, in this video, I would like to explain the current ratio, weight ratio, and cash ratio between the Comfort Glove Company and Supermax Corporation Company. From my opinion, Comfort Glove Company have the stability in current ratio for 5 years comparing to the Supermax Company, which is there are few years that current ratio was near less than 1. Comfort Glove was able to cover their current asset for 5 years. For the quick ratio, Comfort Glove also was the company that have the stability because Supermax Corporation already hit the rate below 1 in 2016 until 2019. It shows that Supermax Corporation did not able to cover their current liabilities. Then, for the cash ratio, Comfort Glove and Supermax Corporation have the same rate, which is below than 1. So, it shows that cash ratio for both company are worse. So, overall, Comfort Glove Company was the stable company to compare with Supermax Corporation for 5 years. So, that's all from me. Thank you.
My name is Alya Salwa Binti Abu Hassan and my metric number is 058526. So this is my part. I want to explain the debt to equity ratio and debt to total capital ratio between Comfort Glove Company and Supermax Corporation Company. From my opinion, Supermax Corporation Company have the stability in debt to equity ratio for 5 years, comparing to the Comfort Glove Company. For the debt to total equity, Supermax Corporation Company also was the company that have the stability because Supermax Corporation Company already hit the rate in 2016 until 2020. So that's just my part. Thank you.
The trend analysis I choose was time interest earned and gross profit margin ratio. I will explain first the analysis of time interest earned ratio. Time interest earned measure company's ability to pay its interest where it is expressed in terms of how many times the interest payments is covered by the company's income. Company Comfort Rubber Gloves Industry Sdn Berhad in 2016 to 2018 only amounted to 1 times, while in 2019 it increased by 1.06 times. However, in 2020, the company experienced a decline of 0.91 times. This situation is not good for the business as it is likely that the business will not able to pay interest with the company's income. Meanwhile, Supermax Corporation Berhad in 2016 was 0.93 times but decreased in 2017 by 0.91 times and increased again in 2018 by 0.9192 times. Then, in 2019, experienced a relatively sharp increase of 1.90 times, and in 2020 also experienced a slight sudden decrease of 1.08 times. The company is making good management in 2019 and needs to maintain growth in order for the business to remain stable. Next is the gross profit margin. It is important in the analysis to the trading of a business. A company must keep up its gross profit margin in order to be able to cover its other operating expenses and to provide adequate returns to its shareholder. It measures the ability of a company to control cost of inventories and to pass on any price increases through sales to customer. Comfort Rubber's growth in 2016 and 2017, the gross profit margin remained only at 15%. In addition, the gross profit margin decreased in 2018 and 2019 by 40% and 12%. However, this company retained the increase in 2020, which is 13%. This company should maintain the increase in order to cover other operating expenses and provide adequate returns to shareholders. While in Supermax, gross profit margin from 2016 to 2020 is the same, no fluctuation, which is 90%. It is good for this company and needs to continue to maintain so that this company able to control inventory costs and continue to increase prices through sales to customers.
Hello, my name is Afifah Zulfa Binti Mohd Kosing. My metric number is 057565. So I want to explain about operating profit and net profit. What is operating profit? Operating profit is gross income minus operating expense plus depreciation plus amortization expense. And what is operating profit margin? Operating profit margin is operating income divided sales revenue. What is net profit? The formula of net profit is net profit divided sales multiply 100%. Operating profit in year 2019 to 2020, the percent of comfort gloves per heart decreased 0.13% to 0.3%. In 2019 to 2017 is a very difficult, which is the percent decrease as much 0.8%, but in 2017 to 2020 the percent decreased only 0.1%. Net profit for comfort gloves Berhad in year 2016 to 2019 is decreased by 9.29% to 8%, but in year 2020 net profit of the company increased by 13.71% to 14.61%. Operating profit for Supermax Corporation, the percent decreased 0.11% to 0.07%. Each year, the percent decreased as much 0.01% to 0.02 only. And net profit for this company is decreased as much 3.05%.
Hai, Assalamualaikum warahmatullahi taala wabarakatuh. My name is Ikhwan Syabil bin Ahmad Zawawi and my metric number is 058706. Today I will explain about analysis ratio about return on asset. We start with Comfort Glove Berhad. Return on asset for Comfort Glove Berhad is the return on asset ratio formula is calculated by dividing net income by average total asset. This ratio can also be represented as a product of the profit margin and the total asset turnover. Either formula can be used to calculate the return on total asset. Now, let's see how is this ROA means to Comfort Glove Berhad. Based on the calculation about in 2016, ROA in only 0.115. We can say that the current performance is good in terms of efficiency. For the ratio 0.104 for 2017, 0.117 for 2018, 0.061 for 2019. It says that average current performance for these 3 years is good in terms of efficiency. Based on the calculation above, in 2020, ROA is only 0.069. We can say that the current performance is poor than the 2 previous year in the term of efficiency. This might be because of low productivity, decreasing demand, or highly competitive in the market. However, compared to the industry average, ROA is one comfort glove Berhad still not performing well enough. Okay, next we will go to return on equity for comfort glove. To calculate ROE analysis, people divide the company's net income by its average shareholders' equity, because shareholder equity is equal to asset minus liability. ROE is essentially a measure of the return generated on the net asset for the company. Net profit here is the profit after tax that entity generate for the period of time. Net profit arrive after the deduction many significant important expenses. Those expenses include cost of goods sold, operating expense, interest expenses, as well as tax expenses. Okay, that is for Comfort Glove Berhad. Next, we go for Supermax Corporation Berhad. Supermax Corporation Berhad on return on asset. The return on asset ratio formula is calculated by dividing net income by average total asset. This ratio can also be represented as a product of the profit margin and the total asset turnover. Either formula can be used to calculate the return on total asset. Now, let's see how its ROA mean to Comfort Glove. ROA mean to Supermax Corporation Berhad. Based on the calculation above, in 2016 ROA is only 0.088. We can say that the current performance is poor in terms of efficiency. For the ratio shows 0.039 for 2017, 0.065 for 2018, 0.067 for 2019. It says that the average current performance for these 3 years is so poor in the term of efficiency. Based on the calculation above, in 2020, ROA is increasing to 0.167. We can say that the current performance is good than the 2 previous year in terms of efficiency. This might be because of high productivity and increasing demand, or low competitive in market. However, compared to the industry average, ROA is number 1. Supermax Corporation is still not performing well enough. Okay, next we go